In fact, that's like one thing my wife gets tired of me saying. I'm like, you just have to start. I mean, let's say you want to write a book. Okay, cool. How do you do that? Well, you start by writing an outline. Start by just putting something on paper. Just start writing. It could be terrible, right? It could make no sense. You have to go. Or let's say, yeah, real estate. How do you get started? My first step, usually what I tell people is education. And then the ultimate thing is you just have to start.
Hello, and welcome to another episode of the Freedom Blueprint. I'm Adrienne Green, and today I am honored to have with me Eric Nelson. Thanks for being here.
Yeah, my pleasure. Thanks for having me.
Eric has been in real estate for a long time. If I'm correct, I think it's 12 years, right?
Something like that. I'm losing track,
Yeah.
but some long period of time, yeah.
Right. So over 12 years, over 1,000 units under management. So he's got a lot of wisdom that he's going to share with us. So make sure to stick around and get all of these gems. And what I love about Eric's story, and I'm excited for him to share with you, is he figured out how to stop trading time for dollars and really living life on his own terms. He has an amazing life now with his wife and kids in Spain, of all the places. And he's working still with his real estate investing while also having this great life. He's the principal of Wild Oak Capital. He's helping other investors do the same. So there's a lot to get today from Eric. Now, Eric, let's start at the beginning though. How did you even get started with real estate investing?
Love it. Okay, well, I'll try and give the short version. I actually, in 2006, so let's make sure we know the timing is right. This is sort of a weird time to buy real estate. My brother and I were in college and we ended up buying a house. And actually, it's interesting, like I had a full-time job during the summer working for an engineering company. And so I could show like 2 months of decent income, and that's how we got our loan. And so like, I think like looking back, I'm like, yeah, we had no business buying that house or getting that loan. But anyway, so that's actually was the true start was we bought a house and then we rented it to our buddies. And we were just kind of like the original house hacking, so to speak, or like, you know, renting rooms out to our friends. We just had this idea on a whim and it was awesome. Like we actually ended up selling it in 2000, like 9, 10 and made a little bit of money. But as you know, the market took a huge dip in that time. And so we were pretty nervous and it gave me an appreciation for the market swing, even though it was my first purchase. So I was young and we really didn't know what we were doing, but we learned a ton. I mean, we fixed out a whole basement and I learned a lot about rehab and blah, blah, blah. But it taught me how to be a landlord. It taught me how to be a landlord to my friends, how to like set boundaries, things like that. But then kind of fast forward later, my wife and I sort of bounced around a little bit, but we finally landed in Durango, Colorado, which is where I grew up. And we ended up buying a house, our first house. And that's why I say 12 years, around 2000. And then I can get into my journey about my work a little bit too, but I was working for an engineering company and I was like looking at my retirement package and I was like, literally it said 35 years. And I was like, oh, like, ouch. You know, it's like more years than I was alive at that point. And I was like, oh my gosh, I don't really know how I can stomach the idea of being here for that long, right? So I started looking at other ways to make income sort of quote unquote on the side. And I found real estate, which I think is, you know, you kind of do any research and you're going to find that. So we ended up buying small rentals, really, again, kind of know what we were doing, but we were sort of underfunded. So we got really into like seller finance and all kinds of stuff. So I get about all that stuff, but there's sort of the beginning of the journey.
Wow. And so there was no huge plan at first, right? It was, hey, your brother and you are just going to do something great. And yet a lot of learning came with that. So I think, you know, maybe one of the lessons here from right off the bat is just get started, even if it doesn't look pretty and perfect yet.
100%. In fact, that's like one thing my wife gets tired of me saying. I'm like, you just have to start. And that I think that's true for almost any idea. I mean, let's say you want to write a book. Okay, cool. How do you do that? Well, you start by writing an outline. Start by just putting something on paper. Just start writing. It could be terrible, right? It could make no sense, but you have to go. Or let's say, yeah, real estate. How do you get started? My first step, usually what I tell people is education. It's just like start listening to this podcast. Start listening to good podcasts, reading books, and then the ultimate thing is you just have to start. You really do have to like get in the ring once you feel educated. And there's lots of resources and people and tools and stuff out there to help you, but you just eventually you have to kind of step in. And so that's a great point.
Right. And it's not going to be perfect. I'm sure you had some missteps along the way with your first rental. And yet the great thing about real estate is it's great. And so even with some missteps, it's usually typically a win, right?
Usually, and I tell people like you hear this a lot on podcasts too. I mean, you might even lose a little bit in the first deal. Let's say like a friend of mine, he's about to break even on his first kind of flip, so to speak. And
Right.
he was kind of down and I was like, well, okay, let's talk about this. What are the lessons you've learned? Do you think you could repeat this and make money? He's like, oh yeah, I know all the tricks now.
Right.
Blah, blah. I'm like, okay, So you're going to break even, but now you have all the tips and tricks that you didn't have before. And so
Hmm.
again, we made a little bit of money, definitely not worth the effort and energy for that first deal. Same goes for really, I would say like second and third purchases too. Like I was still finding out how to really manage stuff and how to, I mean, ultimately, in my opinion, like it's fine to manage one or two early on, especially to become like maybe a little more honed in that craft. But a lot of times it's not really even worth managing. If you can buy a rental property and you can afford the management, that's really
Hmm.
the deal you want to go after. So anyway, lots of lessons learned. And to your point, yes, many like bumps along the way, but ultimately, again, back to your point, real estate's honestly fairly forgiving if you give it time. And so usually it's
Right.
kind of like a give it a little bit of time and it's going to kind of bounce back.
Right. A very good point. That time is a key part there. So you had these, the first deal with your brother, then, you and your wife were kind of doing some stuff there because you didn't want to work in that engineer job for 35 years. So there were some lessons learned. And how did that progress? As you learned those lessons, how did your strategy evolve?
Yeah, it's funny. I mean, kind of back to what you're saying, we really didn't have a strategy. I mean, originally, like if someone said, "What's your plan?" I would say I would loosely like to buy one rental a year for 10 years. That was kind of like the original. I think lots of people set out with that intention. And
Oh, yeah.
that's not a bad plan at all. I mean, that's a really good plan. If you're like, okay, I can afford to save up a down payment for one rental house a year and they're good deals and they cash flow over that period of time. Again, we're including time here. The first ones you buy after 10 years, you could probably refi and keep going, blah, blah, blah. I mean, there's all kinds of tricks. But that was
Hmm.
kind of my initial plan. I would say the number one reason it shifted is because I'm impatient. I was like, okay, I love this. We're out of money. How do we go further? You know?
Right. Right.
And so I got really into seller financing. And so I have a really cool story about that I could tell if you want, but it's basically an older gentleman. I would walk my baby, my son, who was at the time, his baby, now he's 8, along the streets of our town. Like every
Hmm.
morning we'd just go for a walk. It was kind of our thing. And he was like in a stroller, right? And he would kind of point stuff out, and that was like our little bonding time. And every single real estate sign I would call, and every single for rent sign I would call. And that's kind of old
Wow.
school. I mean, you could have got on Facebook Marketplace or whatever, but I just happened to be out and I happened to be like
Hmm.
walking and I happened to have time. So I would just call over and over and over. And all the rental signs are really a key for me because I was like, hey, I see you're renting this. I'm not looking to buy or not looking to rent, but I'm looking to sell. And I got 1,000 no's, right? But this one guy was renting, I could tell was a unit that was like a multi-unit property. And I just approached him and I said, "Hey, this looks like a nice property." He was like literally tapping, like he was hammering the for rent sign on
Oh,
the
yeah.
ground. It was like such a cool story. The sign was like super faded. You could tell he'd never changed rents like in lots of years. And so I just got to talking to him and I was like, "It looks like a beautiful property. Would you consider selling it?" And he was basically like, I never thought about that, but yeah. And then like the conversation progressed. I gave him a couple of days to kind of think on it, called him back, and then I sort of introduced this seller financing thing because he had told me he'd inherited it and so I was like,
Hmm.
oh, okay, well. And so I was like, would you consider financing? He's like, well, what's that? I was like, okay, well, it kind of works like this. And here's the pros and cons for you. Here's the pros and cons for me. And he's like, well, yeah, that sounds pretty good. And so he tossed out a number that he thought was enormous. Like it was $1 million. I'll just say it was $1 million for a sixplex. And he was like, he thought I would just like laugh and run away. But I was like, yeah, we could pay that so long as the terms work in our favor. And so ultimately what we came down to was a 3% down, which is 30 grand, 40-year amortization and like a 4% interest. And he was like, that's great. Like he was into it because the payment I was giving him was right around the amount he's making for rents because they were so low. And then I could
Hmm.
just get in there with very little down. I mean, 30,000 at the time was an enormous amount of money. So don't get me wrong, like we scraped all of our pennies together to get there. And then I just went in there and fixed them up slowly. And then we got rents back up to market. And pretty soon we were making pretty good cash flow on that property. And so that was kind of like the aha moment of like, oh, there's actually other ways out there besides using my own money. And I will caution your listeners, like leveraging 97% is a pretty dangerous move. The only reason I was comfortable was one, just I knew what we were buying at a deal. That was actually like
Hmm.
a market deal. So we could say LTV, like a true valuation, was not 97%. It's just the purchase price, right? So just to caution
Hmm.
people, like if you're going to do seller financing, it still is important to consider risk, right? And so
Right.
anyway, that was kind of the moment that we were like, this works. And then I went to a meetup and I met someone who was doing syndication, and that kind of changed my world. I was like, oh, what's this? And what's multifamily? And So that was kind of like a couple big shifts that happened in those years.
And I'd love to hear more about that shift to that syndication piece because I suspect that's also part of your shift from very much working in your business, a lot of sweat equity to maybe having this great lifestyle that you have while also being an investor.
Absolutely. I mean, there's a lot of steps between there and where we are now. I'll fast forward to where we are now because you kind of touched on it. I live in Spain now with my family. My kids go to school here. The goal for me right now, at least this stage of my life, is really to work as little as possible. And I know that sounds very like selfish and maybe lazy, but it's really like the creation of our job, of our kind of like vision. And so lots of people won't resonate with that. Some will. Some will say, man, that's perfect, right? Like I live in a beach town, spend as much time as I possibly can with my wife and kids. I have a vision and we're continuing to buy, but we have a really good team in place. And so that basically for right now, like I'm the type of person that's like, what's next? What's next? Like kind of a pusher. And I'm like, okay, slow down. Let's take time, be present with family. And that's kind of the season we're in right now. So that's kind of fast forward. And then back to your question. Yeah, I mean, again, my goal was to retire early. So my goal was to say, okay, how can I move the retirement date from 30 years back to 20? And then how can I move it from 20 back to 10? And that was kind of the vision of, okay, we can start to scale. And so that was really like the driver. I was wanting true financial freedom, which is like, I love this podcast for, right? Like I was wanting to not necessarily have to work, right?
Right.
And so once I saw, oh my gosh, this syndication thing is scalable, that's really where we kind of just were like, all right, next level, let's create a team. And we talked a little bit offline about teams and my fears and stuff. But the syndication piece definitely was like the biggest aha in the sense that I'm like, oh, we can provide a really good return for investors. People out there really want to invest in real estate, but don't have the knowledge or time. So we're providing the service for them. And they're providing the down payment, the rehab money we need to do bigger projects. And we can do this over and over and over. I'm like, yeah, this is a perfect business for what I really love and for what I'm good at. And so it's just kind of those things fit together.
And what's cool about it is, you're not the passive investor in that syndication. You are, that active role, that GP, and yet you're also getting that great lifestyle from it. You're not, grinding all of the time. So can you maybe share with listeners, what does that active role, that GP role in the syndications look like for you right now? And what does the rest of your team do? How do you guys work together?
Yeah, I love it. And I think the team is the most important, right? Like this is absolutely team sport. So I'm an extrovert. I like to be on podcasts. I had a podcast. I love doing this stuff, but ultimately it's the team, right? So when I say a lot of times I get stuck in that, I really do mean us. And the same goes for my wife. I mean, all along she was super supportive. We risked a lot along the way. We had some wins and losses, but essentially to answer your question, what it looks like is it's when you get a deal under contract, there's a 90-day period where you're like full go. And there's so much to do. I mean, due diligence and lending and insurance and all of this stuff, and negotiation. And it's a lot to do in a 90-day period. And raising capital is a huge piece of that too, right? Like it's just a sprint to the finish. Once you close the deal, and I will say with a giant caveat, if you have very good property management, which I think is honestly the key to all of this business, you can kind of set your asset manager up with your business model, set the property manager up with the business model, say, okay, we're going to meet once a week and let's go. And so that's what we do. We meet once per week per property. We have about a 20-minute meeting on Zoom and we just go over occupancy and what's happened in the property and what we're doing this month for tenants. We have a huge like people first motto, like we really love to treat tenants really well. But if you hear what I'm saying, let's say you had 3 properties, it's 20 minutes a week per property, give or take. I mean, until things go wrong, until you're shifting, it really isn't a huge time suck once you've purchased it. And so that's what you just say, what do you do? Well, I say, well, I look at the numbers of every property every single week, and I dive really deep once a month on every property, and I have about a 20-minute call per property per week. If you do all the math, it's not a lot of time. And really, and you're just kind of keeping the ship going in the direction you want it to. If something goes wrong, correct. Wrong another way, correct. It's going well, continue doing that. And things do happen, so you're kind of solving problems as fast as you can. But ultimately, that's what it looks like. When we have a deal under contract like we do right now, that's when it's kind of a big push. There's lots to do again. So there are periods of time when I'm working more than others. But once we have a deal closed, then it's like, okay, cool. Let's kind of enter this somewhat coast mode. I will say a lot of systems have been put in place and a lot of organization has come together. To answer your question about the team, so Bonnie is her name. She's our asset manager. She's amazing. She's super, super detailed and that's what she loves. And I'm not really. So she's a perfect person to like really be in the spreadsheets, really be in the KPIs, really be kind of digging into the budget, how much of that turn costs, how much of the rent increase, that kind of stuff. Where are we
Hmm.
as holistically in the budget? My other partner, Shane, he's like maybe one of the smartest people on the planet from my perspective. He's just super, super sharp. So he's always in numbers. He takes care of all distributions. He takes care of all the kind of back end stuff, like really tracking budget wise where we are in everything, and then making sure all the ducks in a row. Like, you have 20 investors or 30 investors on a deal, you got to make sure their details are correct. And we're talking social security numbers and stuff, like really important details that are important, safeguarded information. And then getting all that stuff to the CPA. Tax season is my least favorite time of the year because K1s
Right.
and all this stuff. So anyway, so Shane does that. And then, I tend to be kind of more or less the face of our organization. And so a little bit more branding, social media, podcast, things like that. And so with that comes some capital raising. So I tend to raise more capital, and I also tend to bring in partners that as we need them. So let's say we
Okay.
need more GPs on a deal, then I have a little bit more relationships with folks who say, oh, that person would be good for that role. And so every deal has,
Hmm.
honestly, has a little bit different team, which is kind of a fun piece of the business. So very long answer to say it's a team effort for sure. And then you asked about family. My brother actually joins us on some of our deals as well. He's a very extroverted person as well. We actually put on an event together, and then he can
Hmm.
help us raise capital as well. So there's really a 4-person kind of core team, and then we bring in others as we need. So very long answer. Hopefully that didn't bore you.
No, I think there's a lot we can dive into there because I could just see a listener hearing this and being like, I want that and wanting to know how they get there. So, one of the first questions I have is, other than your brother, obviously, for these other team members, where did you meet them in the first place and how did you get from that meeting to this great, team that you have now? Like, what did that process look like?
Okay, I love that question. So I will say, and this is certainly not meant to be salesy, but I will say it because I believe it. I think most people find success. I will say I don't really know anyone who hasn't found great success in real estate, who hasn't hired a coach or a mentor or joined a mastermind of some kind or one or all of those, right?
Hmm.
So I did all of it. I was like, I want to put gasoline on this fire. I want to just go. I love real estate. I want to figure it out. So I hired a coach. And with that coaching, he had a small mastermind. At the time, I didn't even know what that word meant. I was just like, mastermind? Okay, cool. Let's join that. So my
Hmm.
first partner I found in that mastermind through my coach. And so he had
Okay.
been doing syndication for several years leading up to that. And I really think that's the key is put yourself in a room of people doing things you want to do. And that's true of
Hmm.
really any endeavor. Anything that you want to get really great at, find a mentor or a room of people doing that and join that room. The cool thing about the world now, as you know, you're in Japan, it is very, very easy to find rooms
Right.
online. So you could be
Oh,
anywhere in the
yeah.
world. Like that's not an excuse. So early on, I was doing a little bit of everything, meaning I was underwriting, I was calling the brokers. I was just kind of a one-man show just because I didn't have any money. And also I was just trying to figure it out. And so early on, I met a guy through the mastermind and we kind of clicked and I was like, okay, well, this is a good partnership. And then shortly after that, we found a deal. And so the two of us were going to try and tackle that alone. And pretty soon we're like, oh, wow, we're pretty underwater. We need someone pretty dialed.
Right.
And I had been running a meetup in my town just sort of briefly. It'd only been 6 months or so. I was just doing a monthly meetup about real estate. And my partner Shane I found him there. He would come to the meetup and immediately he's like, wow, this guy's really sharp. So I actually just asked him, like, hey, would you want to join us on underwriting? Is how it started. He's like, yeah, I can underwrite.
Hmm.
That sounds great. And so I was actually paying him hourly to underwrite new properties. And pretty soon I was like, oh, you're amazing. And we align and we have similar values. And so I just basically was like, can you join us on this deal? We need organization and
Hmm.
fast. He's like, sure. So me and John is his name. He has since moved on and doing other things. Great guy. And Shane bought that first deal together as just 3 GPs. And I hustled pretty hard to raise a lot of capital for that deal. And then what's interesting is kind of what happens is as you grow, as you get more, you kind of need a bigger team, right? So I was kind of the asset manager. I was kind of the underwriter with Shane. I was kind of the capital raiser. John was really out talking to brokers at that point, so he was kind of out in front. And then as we acquired a few more, I was like, I'm underwater on asset management. It really isn't my like, it
Right.
isn't really like sphere of excellence, or like it's not my like thing I love. So that's when we brought Bonnie in, and she's very, very good at that. And so, it sounds like okay, we built this team and then we went and did it. Like the reality is more organic than that. It's more like
Hmm.
you hire the person as you need them as you grow. And
Right.
I wish I would have hired a VA, for example, much, much earlier. I was doing a little bit of everything and I shouldn't have. And now I believe so strongly in VAs that if you're listening, if you're even remotely beginning to be underwater, I would hire a VA immediately. They're totally worth their weight in gold. But that's the long answer is took time to build that team. And I didn't just like get together with a bunch of people. But the other answer to your question is one was at a meetup. Actually, two of them were at meetups and one was at a mastermind. So again, it's like groups of people doing similar things where I found those partners.
If you are serious about scaling your real estate business, you need the Freedom Blueprint. This free guide breaks down the 10 essentials every investor must have to grow profitably while reducing stress. It's a proven roadmap to running your portfolio like a business, so you can stop working 24/7 and start building real wealth. Get your free copy now at adriennegreen.com or check the link in the show notes. A few, bits of wisdom you had there is one, how it can pivot and change. You might have started in that asset management role and it's okay to then say, hey, I don't want to keep doing that role, right? I feel a lot of people have shame or really struggle with realizing that they've evolved beyond a role that they have.
Totally agree with you. That kind of happened to my brother. Before Bonnie came on, I asked my brother, he's like a project manager in events. He does like huge events for Red Bull and stuff. And so I was like, hey, do you want to come in this asset management role? Because you're very good at managing people. And he's like, yeah, sounds great. And then pretty soon he's like, yeah, man, this is not really the same and not really for me. And I realized that too. And so to your point, he had to like kind of put his pride away and be like, I don't really want to do this anymore. I will because I said I would. But, so that's when I was like, okay, we're on the hunt for someone who fits that role a little bit better. And that's true. You kind of have to say, either you outgrow it, to your point, or you just realize that's not really the thing that you're great at. And that's key, is to find a partner who does things that you don't like to do or that you're not great at, or both. And that's the perfect partner. A lot of people try and partner with people who are just like them. And it might be like fun and games and high-fiving, but like stuff doesn't get done as well if you don't have different personalities.
Right, exactly. You want that yin to your yang. Now, you talked a lot about that relationship with your brother, and I know in real estate, people often partner with family, right? With siblings or things like that. Can you give us some wisdom for those people who maybe are thinking about doing that or early in that process? Because I'm sure there's some peaks and valleys along the way. What would your wisdom be for partnering with family?
My brother, his name's Ben. He's a great guy. I will actually like credit him to this, because when I asked him to sort of partner with us, he was like, okay, yes, I'm interested, but let's have a real conversation. And so we had this like, I think it was like a Zoom call, I remember, right? I mean, he was basically like, okay, dude, there's two buckets of our world, and that's not totally true, but let's just say it. There's business and then there's personal. And it's like, we'll always be brothers. I'll always love you. And if business, we conflict, we have to draw this sharp line of, this isn't me hurting your feelings, or this isn't me like disliking you or like, like disrespecting you. It's just, this needs a change, or I don't like this about you. This bucket will always be about love and family. And so like to draw that line, I think is easier said than done, but extremely powerful. Because there has been some hard conversations where either I'm doing something he doesn't like or vice versa. And the other thing is he's older than me. So like he always says it's like hard to work for me. And that's not really how I view it, but that's kind of the truth, is like, I started this thing and I love working with him, but at times I'm like, that's not what we're doing here. And that's, kind of like pull rank, I guess you say. And so he's like, cool, I get it. It's business. It's always been really cool in that sense, where it's like, that may be a tough conversation, but that's the line to draw. So that would be my kind of piece of wisdom to take away.
That's fabulous. That I love that, because I do see when people have that relationship, that can happen. You don't want to say something because you don't want to hurt their feelings. You don't want it to affect the relationship. And yet the role in business is for everybody to bring their best knowledge and wisdom to the table to have the best result. And, sometimes your knowledge or wisdom may be better than theirs.
Yeah, I mean, it sounds a little arrogant, but it's kind of true. I mean, there's just some things you're going to be better at, or some ways that it could be done that maybe is just slightly different what they're doing. And so, yeah, great point. You can't walk on eggshells if it's hurting the business, especially if you have investors involved.
Right. You've got that, fiduciary duty effectively of doing what's best for everybody. Now, I would love to hear, I know it's been a tumultuous few years in multifamily. I know you are bullish on the space. Can you share a little bit about what you think of the dynamics and how you're continuing? I mean, you said you're under contract right now, how you're continuing to find deals in this current environment.
Yes, I could talk about that for sure. So 2024, I would describe as one of the worst years in multifamily that I've been a part of. And that's a short period of time, right? But if you ask anyone, since 2010, it's definitely was a pretty tough year. And what's interesting is, like, I hate to say it, but we kind of saw it coming. Meaning 2008, there was some writing on the wall and some people were predicting it. And yes, there's a lot of mortgages being written that should have. I'm one of those. Back to that story. But what's happening was I recall in 2021, once we could kind of go back to like conferences, I remember being at this conference and I say this story a lot. But there was like a lender was one of the speakers and he was up on stage and he was like talking about bridge debt and how amazing it is. And it's short debt, but it's okay because you're going to refinance soon. And like, 3% rates and like everyone's cheering. Like literally like the room was like cheering. And I'm looking around like, does no one else realize this is one, is short term and two, this is floating like a lot of those
Right.
products, right? And it was being pushed and pushed and pushed and pushed. And most of the industry was doing it. I was just lucky, I guess, to say like, we never did that. And I always saw like a red flag. So
Hmm.
we were really fortunate in the sense that like, and I really say lucky because I very easily could have been in that camp, right? It was a very attractive product. But what happened was lots of people got into those. And like a good friend of mine, who I won't name him, but they just lost all their investor capital, maybe like
Wow.
3 months ago. I mean, all of it. It was like a $10 million total loss. And so
Oh
I called
no.
him and I was like, hey man, how you doing? He's like, yeah, I'm feeling pretty beat up about this, but let me tell you the story. And so they bought a property with floating debt and they bought it like 3.25 and the debt rose to 8 and then their insurance tripled. And
Oh
he's
yeah.
like, I mean, you can underwrite conservatively all you want. You never predict that, right? And so we just got totally crushed. And he's like, so I had to look all the investors in the eye and just tell them this is a total loss and I'm sorry. And he was like, man, I just never ever saw that coming. He's like, I knew we could, lose some or maybe like not give great returns, but he's like, I just never saw that coming. And so the reason I bring up that story is it is an unfortunate truth of what happened. And lots of people lost money between 2023 and 24. And some of it's been swept on the rug because no one wants to shout on the social media,
Oh
yay,
yeah.
property sold, lost all the capital, right? If you kind of poke around and you ask investors, it's very hard to raise capital right now for that reason. Lots of people got burned, right? So, anyway, all of that to say, 24 was basically this period of time where people needed to sell. They were semi desperate in some sense, but they weren't quite ready or forced to sell. And I think what's happening now is we're seeing this big shift over. It's kind of sad. Lots of people are being forced to sell. 55% of all multifamily loans are coming due in 25. I think that's right. So it's like 222
Oh my
billion
goodness.
dollars worth of multifamily loans are coming due in the remaining portion of 25. I think that's right. So let's just say even if half that's right, $100 billion worth of loans. And a lot of them are just like people have to sell or maybe not
Hmm.
even have to, just will, right? Because they're coming due. So I'm in this situation of, okay, well, I really wish that wasn't true. I really wish people weren't losing money. But someone needs to be buying those properties. And if there's an opportunity there, we want to be ready. And so
Hmm.
I say all that to say 24 was a tough year. So we only bought one property in 2024 for a good reason. They were still overpriced. There was still some fluctuation in rates. I'm seeing now more deals. We've seen more good deals in the last 4 months than we saw in the 16 months before that. And I think it's just kind of this, okay, realization of where the market's going to be. The other thing is people kept trying to sell properties with the assumption that rates would fall. And I like
Right.
hated that assumption. Like brokers would tell me that all the time. They try and sell this property. Like, oh yeah, well the rate's at 7 now, but they're gonna fall. Like so you can underwrite it to 4 a year from now. Like that I heard that all the time. I'm like,
Right.
no, you can't. Like, I mean, you can, but that's not really good practice. And so I
Right.
think now, like, you look at a pro forma and it's saying, okay, rates are going to be stable or climb, which is the way we should underwrite. And so we're finally seeing pretty much everyone catch up to the reality of, okay, here's the market. We don't know what rates are going to do. We have no idea. If someone tells you, I would say, well, wow, is that true? Or are you just kind of guessing? Most people are
Right.
guessing, even the pros, right? Anyway, so all that to say, I think there's a lot of people catching up to the reality of the market. We're seeing a ton of deals right now. So I'm incredibly bullish on it. I think you have to be extremely careful because, like I just said, you want to underwrite in certain ways. I'm a math person. I'm an engineer by trade, so like I can get way into underwriting, so I'll hold off there.
Well, that was a lot of great information, Eric. I think, especially with the history there, I love how you have that history. So many people in real estate investing, their history is maybe 5 years or less. And so it's nice when we can have these conversations about things like when you were at a conference in 2011, right? That's a different conversation. And it's good for people who are listening to have that brought up and know that history and that timeline.
Yeah, I think I mean there's people out there. I love hearing podcasts of people who went through the 2008 cycle, and a lot of
Hmm.
times they have bumps and bruises from it, right? They're like,
Oh,
I'll never
yeah.
do that again. But those are the people I like listening to because they're like, I'm not going to repeat that no matter what, right? And so that's kind of, I mean, 24 was not 2008, 9. Let's just be real. A lot of people got burned. There's a lot of money lost, but it wasn't like total loss in most cases.
Right.
So I agree. I mean, it's nice to talk to people who've been through more cycles than we have.
Right. Yes. And to see that it can be okay. I agree. I had someone on my podcast, and I think their title was something about they lost everything twice because they gone through 2008, and then, they personally with their portfolio lost it all again. And yet they're real estate investing now. And, it's good to hear that when we feel like we get a little beat up.
What's interesting about most of those stories is a lot of times we hear the total loss, but we don't hear the total win too. It's like if someone's going to really come back to that, like Rod Khleif has kind of the most famous story. I mean, he lost an insane amount of money and then now he's back to it. And I think it's partly like, oh, it's because he was super rich at one point, but now had lost all like care for risk, kind of, like leading up to 2008, you could just like money was everywhere and you could make a lot of money. Kind of same for like 2020, 2021. After we all were like, March of 2020 is one of those months where we're like, what's happening? Like everyone was like, freeze everything. We're like total fear, including myself. And then as we realized, oh, there's actually a ton of money in the market, like so much money was made in 2021, even 22.
Oh, yeah.
Then everything kind of came to a screeching halt when rates climbed. And so like all that to be said, like people were just like flooding into the business. And I think that's the other thing to be said. I'm not here to bash people, but there was a lot of people who were very inexperienced becoming syndicators and all of a sudden buying these properties. Like I remember looking at a pro forma from a person who was in a mastermind and like, hey, can you look at my underwriting? I'm like, sure. They were buying at a 4 cap and they were predicting a lower exit cap rate, like a 3% exit cap rate. And I was like, dude, I don't really like any of this. And I'm going to be very blunt with you, but they ended up buying the deal. And unfortunately they ended up losing out. But like that was happening a lot where people were just so desperate to get in, not really using wisdom. I've shared this stat before. It's actually kind of an embarrassing stat. We underwrite right around 300 properties for every one we buy.
Wow.
And so like it is an enormous amount of stuff to weed through. We can do it pretty quickly, but the point is deals are kind of like good deals are really kind of few and far between. I'm not saying everyone has to do that. In some markets there's more, but we're pretty specific about our buy box. And all that to say, like if you're listening, take the time, be patient. There's always another deal. That's like the advice my dad always gave me. There's always another deal. Find the one that works. And so I kind of rambled there a little bit just because I'm so passionate about these cycles.
Right. No, I think there's a lot of wisdom in that. So thank you. Now, I do know we are at our wrap up questions now, our closing questions. So let's get through those. The first is, what is your go-to tool for managing operations?
Great question. I have a few, and I think it's actually really in the property management side. It's Appfolio. I think it's like the best property management tool. So if your property manager is not using Appfolio, because we've used other ones, that's the most powerful tool for us. And then a good portal for if you're raising capital. So we use Syndication Pro, which like it's pretty good, but I think some sort of good portal where everyone can just go and log in and invest in one place is really powerful.
Perfect. Great recommendations. I was actually just in a text thread where someone was asking about property management. I was like, I'm pretty sure Appfolio is the gold standard there.
It kind of is. It's like kind of the end all be all. It's super expensive, but it does everything.
Yeah, I was like, if the price point works for you, go with Appfolio is exactly what I said. So I'm giving myself a little credit there. Thank you for validating that, Eric.
Yep.
Second, what is one piece of advice you'd give to your younger self when you were starting out?
I think the advice I just gave, one is get started. I mean, you hear that probably from most of your guests, I'd imagine. Get in, get going. The other thing is be patient. Because again, like those contradict themselves, right? Like be patient, but get started. It's like get started within the next 6 months, but look at 50 deals before you buy one, just so you really know the market and you really know what you're doing. So it's a bit of both. Absolutely take action on start underwriting. Look at as many deals as you possibly can, and then be ready to buy and just dive in, like we said before.
Love it. I like that duality of that recommendation. Very nice, like a yin yang. And then what is a book that's been transformational in your investing journey?
I will say I read literally every book I could get my hands on in real estate. And when I say read, it was mostly listen because I'm more of an audio person, but I read them all. One that was really, really good, in my opinion, is Raising Capital for Real Estate by Hunter Thompson. That to me is one of the best multifamily books as a whole. I mean, it's not just about raising capital, it's huge. And then recently I've sort of shifted. I think it's because I turned 40. I'm like in a midlife crisis. I've kind of just been like thinking more about my why and what this is about and stuff. And so the book I looked back when you asked That question is called Life Worth Living. And it's just kind of like
Okay.
a discovery of what does it mean to you. So it's been kind of a cool one recently I read.
I love that. A mix of something very technical and then something more philosophical. Very nice.
Yeah, exactly.
And then, Eric, I know you're doing a lot. You've got this conference that you host. You've got your, of course, capital raising, your syndication as well, this Wild Oak Capital. What is the best way for people to reach out to you if they're interested in any of your multiple endeavors or just having a conversation?
I love to talk, obviously. I mean, you would ask one question, I would give you 5 minutes. I really do. I mean, really love to talk to people. So my email is eric@wildoakcapital.com. So if you're listening, truly reach out. I would love to talk to you about anything about living abroad, about real estate, anything. And then probably the place that you can find more about me and what we do is Eric Nelson Coaching. And I do have a mastermind that you can find on there. And it's kind of like my desire to sort of put together what I had when I hired a coach and a mastermind. It sort of gave me this boost. And so I have a place there people can find me as well.
Awesome. And do you have a certain focus? Is your coaching focused on doing multifamily syndication or?
It's really about real estate. I mean, there are people in there who are flippers and wholesalers and all kinds of stuff. I think most people are sort of headed for that just because that's what I talk about a lot. But it really is just for like real estate investing in general. There's a lot of, I bring a guest on every week. And so there's like all kinds of broad information. And then we have a chat. And so all kinds of questions get asked in there about lending and property management and all kinds of stuff. It's super fun.
Awesome. Thank you for sharing that. I appreciate it. Well, guys, that is a wrap on another episode of The Freedom Blueprint. Thank you so much for listening. Please, if this has been helpful for you, make sure to like and subscribe wherever you are listening. And Eric shared so much wisdom with us. I would love for you to think about another real estate investor who could benefit from hearing Eric's story. And whoever that is, go ahead and text or email them this podcast right now so they can listen as well. And then be sure to join us next week for another episode of The Freedom Blueprint.